Good day, fellow investors. I'm a global investor. I invest globally, and one of the most common questions is, Sven, what about currency risk? What about the risk of holding stocks in another currency than yours? And what about the general currency risk of investing abroad? And I really want to touch on this subject, discuss the details. If you get value from this, don't forget to currency crash that like button. So I recently made this video, the amazing charts explaining the Asian boom, also the video about the Chinese investing framework, and there were so many questions about currency risk and how those foreign currency fluctuations impact the stock. Now let me first start with the risk of the listing of the stock. That is something irrelevant. For example, Alibaba Group is listed in Hong Kong dollars. Then we have Alibaba listed in New York Stock Exchange in US dollars, and we have the same stock listed in Frankfurt in euros. So that's three currencies for the same stock. And then people think, if I buy in a different currency, I'm exposed to the different currency risk. No, and even Google shows it. It shows the market cap in Hong Kong dollars, not in euros here. So their risk, currency risk, this is all arbitraged away. So it doesn't really matter in what currency you buy it. The only risk you run when owning a foreign company is the risk of the currency that the business is operating in. Alibaba is now going global, so it will be a global currency risk, but the most business is still done in China. So the biggest risk is the Chinese yuan or renminbi, that if that loses value, then of course revenues, when reflected in your respective currency, be it the dollar, be it the euro, then yes, that is risk. On the other hand, if the dollar loses value, if the euro loses value, then owning assets, when you own a business, you own assets. Owning assets in a foreign country, actually in different currencies, if those two currencies you're focused on lose value, then that is a reward, not a risk. So my main message is, don't worry about currencies, worry about value. If you can find value all over the world, which means low risk, high reward investing at a fair price, no matter what happens with those currency fluctuations, then you will do well. And especially if you buy when the sentiment is bad, then when the sentiment turns, also the perception on that respective local currency turns, which gives an additional boost to your investing. Of course, you can then also see about currency exchange costs. What are you going to do with your broker? Do you have US dollars? Do you have euros? I simply bought in Frankfurt Alibaba, but I will now exchange them for Hong Kong to avoid any kind of delisting issues. But that's something you have to see. Don't worry about the denomination currency of the stock. Worry about the currency the business is operating in, and always think about the risk and reward. And as I am in Europe, as I'm seeing what the governments are doing, and as you might be also seeing how much money the Fed is printing, we in the Western world are aging, are growing slowly, so it might be wise, as our pensions, the state pensions, whatever you have created in those funds over the last 10, 20, 30 years, that's all in US or euros, then as a private portfolio protection hedge, diversification, we might start thinking about exposing ourselves to other currencies, especially Asia. And you might want to check my video about what's going on there for deeper knowledge, also some other stock analysis that I made. I hope this has cleared out the currency issue. Remember, you're buying assets. The currency, yes, it's risk. The currency the business is operating in can also be reward. the currency of the stock is not really relevant. Thank you, smash that like button, and I'll see you in the next video.